Why you should be careful investing in the S&P 500. I know it's a very popular investment idea. Well, I'm Chase Wilsey with Wilsey Asset Management. Talk a little bit about that today. People continue to shift towards index investing and have a desire to invest in the S&P 500 index fund because they believe it is a good diversified investment. I continue to worry that people do not realize how risky this index has become with the over-concentration in just a few expensive stocks. The S&P 500 currently has a forward PE of around 22, 23 times, depending on the day, which is well above the historical average of around 16 to 17 times. The reason for this elevated figure is the outsized weight of the expensive growth stocks. If you look at the 10 largest stocks, which are Apple, Microsoft, Nvidia, Amazon, Alphabet, or Google, Meta, also known as Facebook, obviously, Berkshire Hathaway, Eli Lilly, Broadcom, and Tesla, they now occupy over 35% of the entire index. And their average forward PE, based off this year's calendar year or fiscal year earnings, is lofty at nearly 40 times. People believe they are getting a diversified portfolio, but Apple at 6.86% and Microsoft at 6.72% and Nvidia 6.24% all have larger weights than the entire sectors of real estate at 2%, materials at 2%, utilities at 2%, energy at 4%, and consumer staples at 6%. And also, you look at this, communication services has a weighting of 9%, but Meta and Alphabet make up a combined 43% of the communication services SPDR ETF. Consumer discretionary has a weighting of 10%, but Amazon and Tesla make up over 38% of the consumer discretionary SPDR ETF. While the performance of the S&P 500 has been great over the last decade, if the performance of these mega cap stocks turn, well, so will the index. With these expensive valuations, I just don't see exciting returns over the next decade. I definitely don't believe they will even be close to what we saw over the last 10 years. Just for reference, the remaining sectors of the S&P 500 are industrials, they're 8% of the S&P, healthcare is 12%, financials are 13%, and yep, technology, 31% of the S&P 500.